Alright, so there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? Today I have with me Anil Rego, founder and CEO of Right Horizons. Also, do not forget to send us your queries on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the money show at etnow.tv. Hi and good evening and welcome to the show, Anil. And let's begin with our question answer session today, and let's take up Vikramjeet's question. I don't think I have Vikramjeet on the phone line. Do I have Vikramjeet? Vikramjeet, can you hear me? Vikramjeet, hi, can you hear me?
Yes, ma'am, I can hear you.
Hi. Hi, good evening, Vikramjeet. We are taking your question on the money show. I believe you have invested in a few mutual funds, and the portfolio given by you has ICICI Blue Chip, you have Canara Bank Blue Chip, Quant Mid Cap, SBI Mid Cap, Tata Small Cap, Quant Small Cap, Parag Parikh Flexi Cap.
Not Quant Small Cap. I have changed the fund from Quant Small Cap to Nippon Small Cap.
Okay, you have Nippon Small Cap. Okay.
Yes.
Quant Mid Cap, do you have?
Yes, yes. Remaining funds are available with me.
Okay. And you want to invest for 14 years, Vikramjeet, right?
Long term. Long term. I am government servant and I want to invest in long term strategy. So I want to know whether my investment is diversified or not.
Right.
Or overlapping.
Right. Vikramjeet, what
it
is
overlaps one sector or other or not? I want to know.
Sure, we'll help you with that. I just want to understand one thing. Is there any corpus that you want to accumulate through this investment? Is this 14 years of time frame connected to any financial goal for which you need the money?
No financial goal, but I want to earn more with this investment.
Right. Got it. Okay, and since how long you're investing? Since how many years?
I have just started from 1st February 2024.
Oh, okay. This month itself. All right. And you have a financial planner, or you're doing it on your own?
On my own. Through ET Money app.
Okay. Go to the ET Money app. All right. So you've picked up all best performing funds, huh?
Yes.
All right, so let's talk to Anil and let's figure out these funds are good for you for the 14 years time frame or not. All right, so Anil, as he just spoke about his intention of being a long-term investor, and so far no goal attached to his investment, and he plans to stay invested in these funds. So as far as the fund mix is concerned, do you like it? It's he's done his own homework and picked up funds. How well diversified? Because overlapping was one of his concerns across categories.
Yeah, so I think first of all, congratulations to Vikramjeet. I think he's done a fantastic job. Okay, and possibly aided by the ET Now app. Right? So I think interestingly, one of the suggestions that I was about to give him was, use Nippon Small Cap, and that's what he's already done. So between giving the data and having this call, so that's a good thing. Of course, I think the one point that I have is that possibly, apart from it, you can also see whether you want to reduce sort of the number of funds. You don't have to do 2 funds sort of in each category, especially for categories like ICICI Blue Chip. Okay, but that said and done, if you've started it, you can also just choose to continue. And so, keeping in mind that there's a reasonable exposure that you would have to the mid and small cap, and that too through quant. And that was the reason, and I think he's already done that. So I think keep it going. It's good to see long-term perspective and also having diversification across categories.
All right, so that's a thumbs up as far as your fund mix and portfolio choice is concerned, Vikramjeet. Is there anything else you want to ask Anil?
I don't have to change any fund?
No changes at all. You can stay invested. Only a bit of change that he's recommended. Anil?
Yes, so I'm saying that you can choose to consolidate Canara Blue Chip into, stop that and start off into ICICI Blue Chip. Okay, but I'm saying that's maybe marginal recommendation because Canara Blue Chip also is not too bad a fund.
All right, so that's the word coming in from Anil for you, Vikramjeet. All the best with your portfolio going ahead. Let's move on to Aman's question, Anil, and he's aiming for a CAGR of 15% long-term investor. Do I have Aman with me on the phone line? All right. So let's go on with the question. I think it's an email query, and Aman wants to be a long-term investor almost for 7-8 years. He wants to invest, and 15% CAGR is what he's aiming. And he wants you to check his portfolio, which has Canara Rego large cap, Parag Parikh flexi cap, Kotak mid cap, Quant small cap, Motilal Oswal Nasdaq 100 fund of fund. And he also wants to have a balance advantage instead of a large cap. And he wants to know if he should be going for it or not. And fund allocation is right in terms of market caps exposure across mid cap and small cap is what is want. What is it? What's the right proportion and exposure ratio, and what is it like in his portfolio so far? We don't have him on the phone line. We could have asked a lot of other questions as well, but then he's just 28, which is a very right time for you to be a long-term investor. And looking at the amount of investment right now, it's monthly SIP of 12,000, and hoping that he would want to increase his investment amount as well. But then so far, how is the portfolio mix looking like?
Yeah, so I think definitely the portfolio mix is reasonably good. Uh, so I don't have too much of recommendations there again. My only point is, one of the funds that he has is the Motilal Oswal, say, mid-cap 100 fund of fund. So that is something that, considering that Nasdaq has already run up and there are few stocks which are, really at highs, I think it may make sense to at least stop the SIP. You can possibly continue with what he's invested in the fund. And I would suggest stop the SIP and say move it into some of the fund, let's say a small cap fund, maybe an alternate, which could also possibly give similar returns or possibly higher returns. Right? The other point that I would like to bring up is his whole expectation of 15% CAGR in the long term. I would like to highlight that sometimes when you look for numbers like 15%, of course, at times we have seen clients who come even 25%, which may not be, possible in the long term or may not be as realistic. But even a 15% means that the portfolio will have to be pure equity. And even within pure equity, then one of the funds that he asked for, right, the balanced advantage fund will not fit into that return profile, right? Even though I would have looked at it, for one of the funds which can sort of manage and balance risk. Okay, but keeping in mind, his return expectation. So that is what he needs to ask himself, whether he wants to maintain that return expectation. If so, based on that return expectation, balanced advantage, may not make sense for him. The other is one small, he mentioned the mid cap one. Just wanted to widely cross check whether he meant Kotak Nifty Mid Cap 50 ETF, or did he mean Kotak Emerging Equity Fund? Okay. Anyways, the fund, I guess both funds are good to have, but so broadly, in summary, I think he has a good exposure. I'm only suggesting maybe moving out of the Nasdaq fund and moving into a small cap fund, and also asking him to keep in mind that if he takes a higher level of risk, then he should be also okay with a higher level of volatility, because a pure equity fund, like say in 2008 when the market fell, could have fallen more than 55% in that year. So that's the only point to keep in mind, and otherwise I think doing pretty well.
So, Anil, as far as international exposure is concerned, is it only this fund that you want him to exit, or it's the entire strategy of having international exposure in your portfolio, which is not the right thing to do according to you?
No, international exposure in the portfolio is good to have. The only thing is I like to be conservative when that particular segment and sector has run up for a long period of time and is at highs, right? So if there's a correction, then that is something that could impact. And we are seeing other funds which may be able to deliver you a similar return profile.
All right, so that's a word coming in from for Aman. Let's move on to Abhishek's question, and this is also via email. Anil, he's 28 years old and he wants to invest in mutual funds, and he decided actually to start investing in this Feb itself, and he's invested 75,000 per month, and he wants to increase his SIP amount from 75 to 85,000 to 90,000 per month, and he'll be doing it this for 15 years. And he has given you the fund mix as well, ICICI Blue Chip. He wants a suggestion for a mid cap. He's also considering Motilal Oswal mid cap, and for small cap also he wants a recommendation, and he's allocated around 7.5 to 8,000 per fund, and he's invested in Axis small cap. He's looking for one more other option, and he also wants to know if it's fine to if it's okay to have the same AMC funds, or maybe more than one fund of the same AMC. So, what is your take on his entire question? It's a very long query. Maybe we'll have to take it part by part. So, so far, the funds, HDFC Balanced Advantage, HDFC Index Fund, Parag Parikh Flexi Cap, Access Small Cap, Quant Large and Mid Cap, Quant Flexi Cap, Quant Momentum, and Nippon India Growth. Anil.
So, yeah, definitely. So, I think broadly he has one too many funds. Okay, so I would rather consolidate out of the 9 funds, maybe come back to about 6 funds, and you're also considering a fund or two additional. So, out of these, I think keeping in mind the consolidation and reallocation, maybe he could exit the HDFC Index Fund. He has a very high exposure to some of the quant funds. I think 3 of them is what he has, a total of 25,000 rupees. So I would think that he could reduce, at least definitely get out of the quant momentum fund. That is something that he can look to exit. He can also see whether, one can replace the quant large and mid cap, say, with an SBI large and mid cap fund. Okay, so I think that's broadly the review from his existing portfolio.
All right, so that's a word coming in. Yeah, sure. Anil, go on.
And if you want to look at the new funds that he suggested, I think that he's considering that ICICI Blue Chip definitely is a fund that he can look at. Okay, Motilal Oswal Mid Cap Fund. I would rather, the Nippon Growth Fund, and consolidate into some of the existing things that he has. And again, the small cap fund, he said another 7,500 he would like to put in. So while he does the reorganization, maybe a Nippon small cap fund is something that he can look at. But broadly, he can also choose to push that into the existing schemes as well.
All right, so that's your recommendation for Abhishek's portfolio. But then it's time for a quick break. But then before we go for it, global experts, Indian policymakers, economists and industry stalwarts will all be in attendance at the 10th edition of Aditya Birla Sun Life Mutual Fund Voyage. Collectively, they'll dissect investing opportunities in dominant Bharat. You don't want to miss it. Stay tuned to ET Now on Wednesday, Feb 28, as we bring you all the coverage live from Voyage. Welcome back. You're watching The Money Show, and we are focusing on viewer queries. Just in case even you're watching the show live, you want to send across your portfolio questions or any question related to your mutual fund investment, you can do that through our WhatsApp number. You can also send across your question via our email ID. 8657974571 is our WhatsApp number, and The Money Show at etnow.tv is the email ID where we keep waiting for your questions. I have Anil Rego with me, and Anil, let's move on to our viewer query, which is from Gaurav. It's via email, and he writes that since last 2 months he's been watching the shows via YouTube, and it's really helped him a lot. He's 34 years old, and he wants to ask you about his SIPs and mutual fund. He's been investing in HDFC Flexi Cap, 5,000 rupees per month, and his wife is also investing, but she's in a multi-cap fund of HDFC, again a SIP of 5,000 rupees per month, and he wants to invest about 15,000 more. And his wife wants to increase the investment amount up to 5,000. Overall investment 30,000, both of them. And they have a long-term goal of 15 years, and they want a return of almost, they are aiming to accumulate at least 1 CR after 12 to 15 years. So what should be the fund mix? And he's also looking at Motilal Oswal mid cap, and his wife is looking at Parag Parikh Flexi Cap to increase the investment amount and to add one more fund. And what should be his fund mix as far as an SIP of 30,000 is concerned?
Yes. So first of all, I think he's chosen, a few funds, and what that means is that there's an opportunity also to diversify across categories, because good part of it is in HDFC and either in the flexi cap or the multi cap space, right? So now both of these funds are doing well between himself and his spouse. So there's no issues at all. But ideally, one would like to see it diversified across categories. So when he's adding this additional SIP, I think it makes sense for him to look at multiple categories. Interestingly, the queries have come in for, again, Parag Parikh Flexi Cap. While the fund is good, my only point is, does it make sense for you to either look at large cap like an, say, ICICI blue chip type of fund? The second one that they've asked is about Motilal Oswal mid cap fund. Uh, while the category, I think, is something that I'm suggesting to invest, I would believe that maybe Nippon India Growth Fund can be one option that he can sort of consider instead of the Motilal Oswal Mid Cap Fund. The other is, one of the funds they can also see whether they want to add, depending on the risk profile, right? Is a Nippon India Small Cap Fund. Now, coming to their expectation, right, in terms of, say, 1 crore in 12 to 15 years, I think that's definitely possible, right? So from that standpoint, they don't need to take that higher level of risk. That's definitely achievable and probably exceeded, based on, the current thing that you're looking at, because the time frame is a good time frame for them. So I would believe be disciplined and continue to, go on this journey, maybe add some of these funds, maybe 10 lakh or sorry, 10,000 or 5,000 rupees they can do across these two funds. Keep a smaller percentage for, let's say, Nippon India small cap fund in case one wants to sort of look at it. So 5,000 rupees is what I would suggest there. And say a blue chip type of fund can definitely be a 10,000, and so also if they look at the Nippon India Growth Fund.
Right, so that's the way ahead for Gaurav, and with that, it's a wrap on the show today. Anil, thank you so much for being on the show and helping our viewers with their financial portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID, where you can send us your portfolio questions, be it mutual funds or insurance. We will get it checked by our experts live on the show. Thank you so much for watching. Goodbye.